the market is in a peculiarly weak position. We're talking now about the S&P. Let's put that up for a minute. This is the bond market, which is also continuing to confirm our larger forecast. But let's get over to S&P and take a quick look. So ordinarily, the S&P would not be where it is today. This is an unusual posture for the market. And although it doesn't look like much on Friday, there are some things late in the day that happened on Friday that were unusual by a relatively large margin. I mean, kind of more than normally unusual. And what that can mean is that the market really is getting ready for a much, much larger decline. So we're going to be watching to see how today's session closes. The close won't definitively, absolutely, deny the further decline, most likely, but it can go some distance in, sort of fixing the position of the market. So we are really interested in what all this plays out like. And this could, like I said, it could mean a lot temporarily to the downside. So you have to be very careful with long positions. Let's take a look at the intraday, the hourly, just as an example. And they've firmed up a little bit here. I mean, the market has moved down. We could easily firm up here and see some higher prices. And we, of course, sometimes will use our own intraday forecasts as a means of understanding whether the market is really weak or strong. So as an example, if we had a forecast for the market to move from this low, say, up to this level, and the market really couldn't get to that level and turned like this, that would be a sign of weakness, right? That they couldn't get up to such and such level. So if that is the case, then we'll know that there's probably more coming to the downside. But I do think it's important to be a little extra cautious with the market under the conditions that we have on the long side. And, if they do recover well, and maybe you would have missed a good long move, that's fine. Now we have new information. The market's continually changing its position and its information. And when the information changes, you may miss that move that shows you that the information has changed, but that gives you information about the next move. So you still have an opportunity to be in the market and do something with it. So it is really interesting how what they've done. We had a forecast for the market to move down to 40 from early today down to 45.25 to 23. They did do that. Today's low is 44.25 to 23. We did get down to 44.22.75. So the 23 has been done. Normally there would be a bounce off of a completion like that, probably more than what you just have seen here. So we're going to wait and see. But anyway, it's a very interesting posture for the market. And this posture, if it is going to confirm something really bad, then that would take us into next week. It wouldn't just be this week, probably. It would take us into next week. So we'll see. It all kind of ties into the week of April 18th. So next week is the week of April 18th. And on that week, there are important indications. It is plus or minus a week, but the on-time week is April 18th. And there are decent numbers of indications for that week for us. If the market is really not in very good position, talking about the S&P, then we won't expect to see any of those targets, whatever it is on the upside, get reached, and instead see the market be moving down pretty dramatically. Again, it's not really normal what they did on Friday, but it's a big signal that we are taking very seriously until further notice. Additionally, some newer work that we call I don't even really know what the name of it is, but when markets get into what we could refer to as a conflict period, and conflict doesn't mean like the war between Russia and Ukraine, it means internal conflict in the market. When that happens, internal mathematically conflict, when that happens, the market has dramatic, sharp moves. And I'm going to try to explain this. Last week, the market was in a move up inside a conflict period for one more period up to complete the run that the conflict would be based on. But instead of that, late on Friday, the market moved back down and it got to the level that would invalidate the original conflict period even existing. And that level is 44.83. So Friday actually closed at 44.83 and change on the intraday chart. So that's not a normal position when the market's in a conflict period to be at. And so that negated the conflict period on that smaller time frame. And now we see a conflict period that would take us into the week of April 18th on a larger time frame, in part due to this. It's kind of hard to verbalize it better than that. But if we don't close well and the market doesn't do well, then we're going to be leaning on this larger conflict period, which would not have been in play if the market would not have come back to 44.83. So there's kind of a sequence, it's kind of sequential. And the fact that they did come back to 83 negated, and we told everybody that the market should not come back down to 83, otherwise the whole thing is negated. In doing that, it actually opened the door to a larger, more important conflict period that takes us potentially into the week of April 18th, which is next week. So it's kind of ugly. It's like, wow, we just went from we're on our way up to finish a beautiful, indication to no, that indication's off the table. And now there's an even larger indication potentially to the downside. See? So that's the big spin around that we are dealing with. And that's why we're just simply not going to take long positions in the S&P until we have more clarity that this larger conflict period for a bigger move is not underway. And here we are near the lows of the session again. The market is not, doing well here. It's still under a great deal of pressure. So I hope that explains what happened between the last couple of hours of Friday, 3 hours of Friday, and into today. A smaller indication failed in a very unusual manner, and that set into a motion a larger, same kind of thing, conflict period indication from a much larger scale that so far the market is acting like it's under a very, very large pressure to the downside. So I hope that's good. The naming of these things is sometimes a little unfortunate because I'm not really naming them as a means to describing them under those names to people, but I end up doing that. So there you go. That's what I call it, is because there is a conflict that takes place that the market will burst out of that area. And that's what we're thinking into the 18th. Thank you, Timothy, for your question. Thomas is here and he says, what were you originally expecting the market to do on Friday? 4.8 to go up to 45.24 to 45.26 would have been the normal place for the smaller of the two conflict periods to resolve itself. And on the way there, they got to like 16 or whatever it was, and then suddenly turned down and went back to 83, which is what negates the original smaller conflict. And that's a really peculiar place for the market to be. And then we had the follow through to today and so on. So thank you, Thomas. Samuel's here and he says, I know you aren't into fundamentals as much, but do you think the bank earnings would lift the S&P towards the end of this week? It may, and there's nothing wrong with fundamentals. There are people who can trade fundamentals. So yes, I think the answer is, yeah, you could see that. And this is, seasonally, you have this week is seasonally, because supposedly would be a bullish week because it's Good Fridays on Friday and so on. But you have to be careful with seasonals because for a number of reasons. But one of the things that seasonals can do is they can do this into Wednesday and then do this into Friday. And you say, well, see, they were bullish into the holiday. But in order to get to that position, they had to do this. So you can't just go into a week like this. I know you guys all know this. You can't just say, well, it's a bullish week and we're just going higher. Sometimes that happens, but you have to be, especially under the conditions that we have, you have to be extra careful. Connie also says, so if we go much lower in the S&P, will we see 4720 this year? Yeah, we can still, all that can happen. It is a good way of restating your question is what happened between Friday and today potentially enough to take 4720 off the table for the third quarter? Not now, it isn't. And even if it hits the targets that we've given out, that won't be enough to take it off the table. So, but it is weird enough to give us a minute's worth of pause about the bigger picture. So we'll update that a little bit as we, as more things come to fruition here and so on.